Good morning, everyone. I've been looking for the opportunity to share with students the concept of a high value day. Now, high value day does not necessarily mean a big up day in the market. It could also be a big down day in the market. Right now, we are on Wednesday, November 9th, is what I have my OptionNet Explorer set to. Now, the day today is actually Thursday, November 10th. We're going to get there in just a minute. But I want to show you how I structured a trade or two to take advantage of a big up move in the market in this case. And you can do just the same for a big down move in the market, depending on where the market's at and where your particular trade is at. So this particular butterfly, we've been in this butterfly for quite some time, 61 days. I'd moved it around as the market moved around, etc. It's got quite a bit of positive delta in it at this point. And on Wednesday, as the market was moving around, I was up a little, I was down a little, etc. But I finally came to the conclusion, since we're getting close to expiration here, I felt like our markets could potentially rally after the elections went off and there weren't major glitches in those elections. I felt like there was a chance that our markets could rally a little bit. But not only was I looking at the chance that our markets could rally a little bit, but I also looked at how inexpensively I could pull off half of this trade. So basically, as it got later in the day, right now you see we're looking at 820. As we get later in the day, I was able to take this off very inexpensively. So this is a 100-point wide spread. And, again, it's going to be, if we take a look here, it's going to be a $97 credit. Later in the day, I could probably get even a little bit less, a little bit more than that in credit for that trade. So in other words, there wasn't much more to be had. It was a 100-point wide credit spread. And when I got to the point where I could get about 98.50, I think is what I ended up selling it at, it's like, okay, there's only another $1.50 I can make out of this thing. I might as well just go ahead and take it off there, which is what I did yesterday. So again, I got about the maximum out of that side of the trade. There really wasn't much more I was going to get out of that side. So I could pull it off, and then that did give me the opportunity for a nice profit on a big up move. Now, this thing expires about 9-10 days out. So I've got a week. Again, I'm thinking that maybe over the next week we might get some up move on this thing. So that's the purpose behind it. That's why I did what I did, because I could remove half of this very inexpensively. If we march this thing forward a day, you'll see that on Thursday we did get a very nice up move, a much larger up move actually than I was thinking that we would get. Certainly a larger up move than I was thinking we would get in a day. So at this point, upon the open this morning, when I saw how big a move we were looking at, I did go and close out the bulk of this trade. Now, right now I've got it turned on to ignore today's trades. Unfortunately, I say unfortunately, I ended up closing this trade out in around the 8,500, 8,200 profit range. I could have potentially left this on, but you don't look a gift horse in the mouth. After the market gapped up 150 points and has run an additional 20 points or so, those are some of the largest moves I've ever seen, largest up moves I've ever seen in a market. I just didn't feel like I could expect any more out of it, so I did go ahead and close out this trade, again, for a nice profit. But the takeaway point here is I want people to understand that the reason this was able to happen is because I had recognized that I had gotten virtually the maximum out of the other side of this trade that I was going to get. There really wasn't any benefit in hanging on to it at that point. So by removing it, it did allow me to be set up for something like this. So again, that's what we call a high value day. It could have been just the opposite. If, for example, the other side of this trade had been on, my credit spread had been on, and the market was way up here somewhere, I may have been able to pull off this side of that trade very cheaply. And then on a big down day, I could have had a similar thing happen. So again, the takeaway here is I want people to always be looking at the different components that are in your trade. And when you look at those different components and you realize that a piece of that trade you've either achieved close to the maximum amount of value you can get out of it, take it off. If you have taken the most amount of risk that you can take in that side, and there's no more benefit to hanging on to it, take it off. So that does give you this sort of potential. I'm going to pause right here. I think I've got another one I can share as well, and I'll be right back to you. And this is another butterfly that I've had on for quite some time. This butterfly has been moved around quite a few times. And, you know, it's cooking along pretty well here, but it does have a fair amount of positive delta on it right now. And it's getting a fair amount of gamma risk. In other words, if the market were to move up or down significantly here, it can lose rather quickly. I normally don't like to carry my trades into that type of situation. This thing expires also late next week, which is why it has all of this gamma associated with it. So this was on Wednesday. Now we marched this thing forward a day, and let's take a look and see what transpired when we got this huge up move in our markets. So this thing ended up going to a very, a greatly enhanced profit amount. At the market open, it was up in here somewhere. At that point, I actually went and I took off the bulk of this trade. So if we turn off the ignore today's trade, so I took off the bulk of this trade. Again, we had gapped up in our markets about 125 points. That's a huge gap up. I mean, that's probably got to be in the top 10 gap ups I think I've ever seen. So my anticipation at that point was that this thing was not going to continue to run upward. So I took this off. I have just this remaining spread on. My thinking is that the market was likely to either stall there or maybe pull back a little bit there, allowing me to dramatically increase my profits further. Obviously, that has not played out. I've given up about $1,000 of that gain in this trade so far today. Now, I will probably end up closing this trade by the end of the day today. I don't anticipate that we're going to be able to rally significantly further here. Again, this is a monster up move. The fact that you've been able to gap up 125 points, run an additional 50 points from there, I mean, that's almost 5% up move in our markets. So I really don't see how we can rally much more. Now, it's the market, so it can do anything. But that's my contention. So I'm hoping that going into the close today, we might get a little bit of a pullback here. And if so, I'll go ahead and close that trade out. One other possibility here is I could re-butterfly this thing. I mean, I could come back in now and do something along these lines if I wanted. And essentially, and again, I can, of course, balance that however I choose to balance it. But since we are expiring next week, I can do something like this and take a lot of this risk out of this thing and let it decay in this range and possibly get a little more out of it. So those are the couple things I'm playing with, again, going late in the day here on Thursday. I will say I don't normally like to take trades close to expiration. I usually like to close them 1 to 2 weeks in advance. However, in the rare occasion or the rare instance that I can do something like this where I have absolutely a no-lose trade, I know no matter what the market does, I will have locked in $7,500 in profit at least in this trade. When I'm in that scenario, sometimes I'll kind of roll the dice and I'll let this thing maybe decay for another week or so. and see where I end up. So it's a way of kind of fine tuning or honing my skills a little bit for closer to expiration trading. But again, as a general rule, I don't do that. But again, in a case like this, it's a possibility. So I just wanted to share those with you. Again, you've got to prepare yourself or set yourself up for taking advantage of high value days when they do happen. And that occurs when you know what to do when you get that day, or knowing what to do when most of one side of a trade has either achieved close to its max profit or its max loss, and there's no value in keeping that piece of the trade on, and taking that piece of the trade off would give you that high value potential. Hopefully this was helpful. I know it was slightly confusing, but hopefully the examples helped show you some ideas.